Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe the channel. Hardcore, Canada may need a recession to cool down inflation. Ottawa, the underlying pressures driving inflation in Canada are likely to peak in the fourth quarter of this year. Economists told Reuters Truth must see signs that rising prices are becoming entrenched on and warn a recession may be needed to avoid a spiral. Canada's inflation data for August will be released on Tuesday, with analysts forecasting the headline rate will edge down to 7.3% from 7.6% in July and a forced decided hike of 8.1% in June. But all eyes will be on the three core measures of inflation: CPI, common CPI, median, and CPI trim, which taken together are seen as a better indicator of underlying price pressures. The average of the three hit a record high of 5.3% in July. Six of eight economies surveyed by Reuters see core inflation peaking in the fourth quarter as underlying domestic and global pressures start to ease. So the path back to the 2% target will not be brisk. Rapidly cooling growth, the pullback in housing price and less pressures on supply chains will help keep core inflation relatively soon, said Doug Porter, chief economist at BMO Capital Markets. However, we believe that it will be sticky and will descend only slowly through 2023, he added. The burdening of price increases, increased wage settlements, as well as rising consumer and business inflation expectations are signs that inflation is becoming more entrenched in the economy. Economists told Reuters 6 of 8 said they see signs of entrenchment. That is an outcome that the Bank of Canada has hoped to avoid, saying it would require more aggressive interest rate hikes to bring inflation back under control. The central bank has already raised interest rates by 300 basis points in just 6 months to 3.25%, a 14-year hike, and the lowest policy rate among central banks overseeing the 10 months traded currencies. Still, economists don't expect any shift to a wage price spiral to be permanent, particularly if the economy slows down. We think aggressive interest rate hikes will be followed by a recession next year, which will prevent expectations from coming fully uncovered, said Nathan Johnson, assistant chief economist at Royal Bank of Canada. Economists as this Jardines Group and expert economists also foresee aggressive rate hikes leading to a recession. Truth they cast it as a mild downturn. For its part, the Bank of Canada says it can slow growth without tanking the economy. The bank still sees a path to soft landing. That's still our objective. We need to cool the economy to get inflation back to target. Senior Deputy Governor Caroline Rogers told reporters earlier this month. As for headline inflation, the central bank has it returning to true point in 2024. Most economists agree with that time frame or think it could happen sooner. We think that be a 2024 story, said Beta Currency chief economist at TD Securities, but there should be compelling evidence that the data is trending in that direction with the second half of 2023. And the increases in the unemployment rate, for example, from 3.5% to 3.7% was driven by a rise in labor force participation of more people not just in jobs but choosing to look for them. Perhaps more importantly, the labor force gain was the product of strong flows into the job market, not just as it sometimes is a decline in people living in important distinction. The number of people outside the labor force who shift directly into a job in August at 4.9 million was the largest since the start of the pandemic. Okay, that's all from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. And thank you.